White House Press Secretary Karine Jean-Pierre, meanwhile, taking to Twitter yesterday to brag about the decline in gasoline prices. Watch.
Hey, everybody. So gas prices have been declining across the country. In the past more than 30 days, we have seen gas prices go down by more than 50 cents per gallon. So let's get into some graphs. This is so exciting, guys. I'm in the graph.
She also went after oil refineries. She says they were making profits. All the while, she leaves out that gas prices are still $2 higher than when Joe Biden walked into the Oval Office. In fact, prices are up 40+% year over year. Joining me right now is former White House Chief of Staff and former OMB Director Mick Mulvaney. Mick, great to see you. Thanks very much for being here. It's interesting to see her celebrate the decline in gasoline prices. It's a risky move because markets go in both directions. What's your take?
Well, they do. And listen, we're all glad that prices are coming down a little bit. But, Maria, there's only two ways that can happen. Either the supply of gasoline is going up or the demand for gasoline is going down. That's how prices get established in a free market. And I think everybody knows the supply of gasoline under this Biden administration is not going up. In fact, we've lost almost 1 million gallons a day of refining ability in this country over the course of the last 2 years. So supplies are still going down. So what does that mean about demand? It means the only reason that prices can go down is that people are demanding less of it because we're moving into a recession. People have less money to spend on gasoline, so the prices are coming down. So look, when you were in the Trump administration, you could increase the supply of something and the price would come down. People would be richer and be able to buy more things. Under the Biden administration, the demand is going down. People are getting poorer, and that's why prices are going down. So I'm not really sure why the White House is running victory laps on this one right now.
Well, I mean, one of the reasons that demand is going down is because of this sharp slowdown in the economy. And next week is a big one on the economic front. We've got a Federal Reserve meeting Tuesday and Wednesday, but we will also get the first read of second quarter GDP. Mick, we know that the first quarter is a contraction of 1.6%. Do you believe we are in recession now? And will that be proven next week with the GDP contraction for the second quarter?
Yeah, you sort of get the feeling that it is a recession, right? It's different because you're sort of at full employment, although the labor participation rates are still way below where they should be. But it's curious now to see the Democrats trying to redefine the language. The previous segment you did on what defines a recession was stunning to me. I can assure you that if there was a Republican in the White House right now and we had 2 consecutive quarters of a GDP reduction, that would be a recession in the minds of the Democrats. So it's really a little bit disturbing as once again the Democrats are undermining even the language that we talk about or that we use when we talk about our own country. Two quarters in a row of GDP contraction is a recession, period, end of story. They know it. And once again, you got to wonder why they're sticking their neck out on something as absurd as all that.
Yeah, it's funny. They play word games. Let me just show you that Verizon is out this morning, and it is a miss on earnings. It's just reporting its numbers right now. Verizon is also cutting its guidance for the second half of the year, Mick. This is another indication where we are seeing a slowdown in this economy as this administration pushes this green agenda and this climate change agenda, which has come with higher costs for corporate America, Mick. Your thoughts on what is going on in terms of this administration pushing an agenda, even though the American people are pushing back? Look at these approval ratings. Verizon is cutting its forecast, and that stock is down 4.5% right now.
Yeah, and you can see other indicators as well. Home prices, new starts, lumber prices. There's a lot of indications that things are slowing down, which when you're a Democrat and you're a demand sider like so many at the Fed and certainly the Treasury are, the only way to really bring down prices is to reduce demand. And reduced demand comes from taking money away from people, making people poorer, giving you less money to spend. And if you demand fewer things and less services, the price for those goods and services will go down. It's one of those classic differences between Democrats and Republicans. Republicans are supply siders. We think that the best thing to do is to make more things so that there's more things for folks to buy and that prices will come down. And Democrats simply refuse to do that. Look, one of the reasons gas prices are as high as they are is because Democrat policies regarding fossil fuels are working. We've lost over almost 1 million barrels a day of capacity over the course of the last couple of years. We're losing another couple 100,000 barrels a day of capacity in the next couple of years. The Democrats are making it difficult difficult or unprofitable to invest in gasoline and fossil fuel production. These policies are working. That's why you're seeing the supplies go down and the prices go up. Until you change that, the only way that prices will come down if demand comes down because people have less money to spend on gas.
Yeah. All right. Here's Brian Brinberg. Go ahead, Brian.
Hey, Mick. So here we are in the midst of what looks like a big slowdown, and the president this week is towing the line, talking about a climate emergency, which would unleash a slew of executive orders that would have the sum total effect of completely gumming up the energy markets in the United States. If we get what we're hearing about from this, how do you think that's going to affect the economy? How do you think that's going to affect gas prices, nat gas prices over the next couple of months?
Well, it's inflationary, right? Again, if inflation is too much money chasing too few goods, and you're going to introduce a bunch of policies that make it even more difficult to get those goods to market, we're talking here about gasoline, the prices of that go up. Brian, what I really wonder about if Democrats understand how gasoline gets in your tank. You have to pull it out of the ground. They're regulating that. You have to move it to the refineries through pipelines. They're regulating that. You have to refine it. They're regulating that. Then you have to put it in pipelines again to get it out to the consumers, and they're regulating that. And then they wonder why the supply of gasoline is going down. Look, if there's one good thing about the reason that the fact that prices are coming down, other than it's a little bit cheaper, is that it puts this whole Putin price hike thing to show up for the lie that it was. Putin is still in Ukraine. The Russians are still not producing anything, yet prices are coming down. So clearly, if that's the case, then Putin was not the reason that prices went up in the first place. So at least that one lie from the White House has been exposed. My guess is it's not the last one before this economic cycle is over.
Christian Whiten, jump in.
Mick, with a recession likely coming, there's some dispute about that, but I think a lot of us are in agreement that come next Thursday, we're going to be officially in a recession. Of course, we're in one now if the report comes out on Q2. What about the coming financial crisis with the federal budget? Is that going to happen, do you think? We've been talking about the intense spending of the Biden administration, and Senator Manchin, that magnificent dream crusher of progressive dreams, put the brakes on some of it. But don't you think the federal budget is going to have to come down a lot if we're going to tame inflation? I mean, can the Fed really do it all?
Yeah, it's a great question, Christian. Here's the thing that I worry about that I don't think nearly enough folks are talking about. I really believe that the Federal Reserve's hands are tied at a certain point. They can't do what Volcker did in the 70s and the 80s to raise interest rates 10, 12, 14%, because if they do that, ultimately that flows through to the largest borrower in the world, which is the federal government. At $30 trillion a year, if you're at 3%, you're talking about $1 trillion a year in interest payments. I think the Fed knows they can't do that. They won't be able to raise interest rates as aggressively as they would be able to do if the federal government wasn't so heavily in debt. And I think that means the Federal Reserve is going to have to either figure out a different tool to use or is going to be willing to accept a higher level of inflation over the long term. Otherwise, if they go crazy on interest rates and only use that tool, they could bankrupt the federal government. I think that's a very dangerous place to be, and I hope that they know that. But it's really a bad situation to be in when you're this heavily in debt, and I don't think that's going to change coming out of Congress anytime soon.
Yeah. I mean, what's the interest payment that the U.S. sees in terms of an increase as rates go higher by 1 point, Mick? I mean, we're talking about hundreds of billions of dollars, right?
No, at a very basic level, 1 percentage point increase in our borrowing costs is $300 billion a year. So roughly a half to a third of what we spend on defense. That would be the second biggest line item in the discretionary budget.
Mick, great to have you. Thanks very much. Mick Mulvaney joining us this morning in D.C. Thank you, sir.